August is tough, gang. There's no question about it. And we're looking at the last trading day of the month. So, good riddance to August. It's typically the worst 2 weeks. And when I say worst, I don't mean bullish or bearish, right? Far too often, we tend to look at bullish as good and bearish as bad. We want trends. And yes, bullish trends are far more predictable than bearish ones. But a quote unquote bad market or tough market usually comes down to just a handful of things. It could be really low volatility, so we're not going anywhere. It could be really high volatility, so the movement is extremely unpredictable and outside normal historical ranges, right? Or it could be chop. Chop meaning if it's wide enough chop, that's actually not too bad. We can go back and forth within the chop, and the distance between the support and resistance is big enough to merit some trades. But when we don't go from one end to the other, when there's very little follow through because of the biggest problem, which is volume, that's where August is a problem. It's not that it's a bullish or bearish thing. Direction in a follow through in any direction is fine. The biggest challenge is when volume is low, the follow through is low. And that's where, for us as traders, that's where we make our money. We pick our spot, dig our heels in, and then we expect the market to move higher or lower. And when it doesn't, then our risk reward ratios aren't as good. The potential for profit isn't as good. Now, the first 2 weeks of August aren't too bad, right? It's still about as good as maybe July would be, definitely the first week. But as you go into this last 2 weeks of August, which clearly are the ones we've been in, it makes perfect sense. It's not that whatever we were doing is broken. Because remember, the first thing traders do when they're struggling is they won't necessarily look at the market environment and say, hey, this is different than what normally the environment is when I make money. It's got to be my indicator. It's got to be my strategy. It's got to be the asset class, right? They shift really big away from the things that typically work. So as long as you remember, there are certain times of year that are great and certain times of year that are challenging. We're really only talking about 2 weeks at the end of August where we have to reset our expectations, right? Okay, so what do we have coming up today and what have we already seen today? Well, you can see that huge candle at 8:30. That was the core PCE, and it came in line or as expected. YOY means year over year, and year over year, the core PCE was expected to be at 2.9, and it was indeed at 2.9. No surprise, right? Now, within the context of potential rate cuts, that's not a terrible thing. If inflation isn't any higher, quote unquote worse, then the Federal Reserve has a pretty good reason to consider cutting rates in September. What's really interesting is both Friday at Jackson Hole and today, FOMC Powell and FOMC Waller, they have put jobs in the spotlight. Now, Waller is one of the names that's in the hat for the raffle, for the big drawing for who's going to be the next FOMC chair. And one of the things that Waller put out there, whether it was jockeying for that position or not, doesn't matter. It's out there now. And he really squarely, without naming non-farm payroll, mentioned that if the labor market continues to weaken, if that weakening trend is still in place, they might even consider a 0.5 point cut in September. And while that may not be probable, in fact, we can look at what's probable. I'll show you right now. When we look at the target rate probabilities, is the September meeting probable for a 0.5 point cut? No, it really isn't. It's 87.2% expected to be a 0.25 point cut. You might say, Rog, how do you know that by looking at these columns? If we're at 425 to 450 now, which is this short column there, that would be a hold. So it's only less than 13% expectation for a hold. It's just over 87% for a cut. And clearly, unless it factors in later on today, clearly, let's make sure, refresh the page. Yeah, nobody but nobody is even factoring in that possibility for a 0.5 point cut. But let's see if that gains traction. And we'll know, because what we'll end up with is another column to the left of this tall one that shows 375 to 400. Right now, it's not as if the FOMC has not been willing to cut a half point. We know we saw that last September. So macroeconomics comes down to that and that alone, right? Is the Fed going to cut? Are they going to hold? Are they going to hike? Whatever the cycle may be. Everything else is just the data that the Federal Reserve might use to make that decision. And that's why we keep an eye on certain economic events like PCE today. Chicago PMI is coming up at 9:45. University of Michigan revised consumer sentiment is coming up at 10, as is the revised inflation expectation. Those do have some impact on the movement. And so what that's going to mean for us is that when we set up the day trades, now how many of you, by the way, here in the Mastery have noticed, hey, Rog, this last week, post-Powell, the day trading hasn't been lots of setups, but the follow-through's been pretty darn good, right? Follow-through throughout August, the first 3 weeks was sometimes non-existent, difficult at best. And then all of a sudden, when we got Powell to finally commit to the fact that, yeah, they're probably going to cut rates and labor is likely going to be the reason, all of a sudden, presto bingo, we're getting some nice moves like yesterday's move in the QQQ. How many of you set that up, took that trade on the QQQ yesterday? Not too bad. We took this elevator ride up right into 23.8. That and or time was our ultimate scale out, and that was a heck of a day trade. Was it a better day trade because we did anything differently in the room other than our 3 core setups? Not a thing. Did we do anything different in terms of risk? Did we change our risk parameters? Nope, not an inch. Did we change the indicators? We just kind of reinvent the way that we get in? Nope, not a bit. We just stuck with the things that we always do. And now we can see, oh, this is what an improving environment looks like. And this is why Rog is so excited about September. Yeah, that's absolutely true. So let's talk about the time crunch today. So anytime we have a 10 a.m. hot zone that is impactful, right? Impactful 10 a.m. hot zone, what that means is I'm going to look for day trades, but I would prefer to be in the trade triggered by 9:50 at latest, because that gives us 10 minutes to see some follow through. That gives us about 9 minutes to determine that about a minute before the hot zone, do we want to cut the trade or not, right? So that time crunch with a 10 a.m. hot zone's a pretty important one. Now we set up the NQ pretty early in the session. If you take a look at the notes, everyone in the Sector Secrets Mastery has the notes. There's a link in the notes section of the room that will show you where to find them, or there's a workflowy link. We also send them out every Monday. So if you're ever looking for the note link and maybe you weren't in the room on a Monday, check the alert section, check the notes section. And the way you do that, just really quickly before the bell rings, because it's kind of important. So the way you do that, I'm going to bring the room right into view here. So this is the very room that you're sitting in at the moment. Let's move this over. There we go. This is the very room you're sitting in at the moment. Yeah, I got a couple doohickeys running that you don't, but that's because, I'm on this end of the mic. All right, so take a look. Over on the right side of the window, and I know it's a little small, you'll see the screens, which is where you see my screens. You'll see, so basically yours is going to look like this. Yeah. Okay. Infinity mode, right? To infinity and beyond. Then you go to notes, and that's where you'll find the link. So just to the right of the screens, click on notes, and that's the bell. So let's get to it. All right. Let's get to work. All right. The main layout that you're looking at is RH screen number 1. We have up to 4 screens in this room that I'll be sharing. If at any time you want to take a look at screen 2, that's our intraday multi-chart sectors. We're going to keep it on that for relative performance within the indices. Screens number 3 and 4 are the indices, crude oil bonds, silver, gold. Sometimes I'll put Bitcoin in there or other symbols, but that's going to be our other layout for futures that we're looking at, that will ultimately give us insight into the sectors, ultimately give us insight into individual stocks that we might trade. Okay, knowing that we can't touch all the water, the best place to start when we're day trading is going to be at the index level, because I don't want to trade Apple if the NASDAQ isn't going higher. I don't want to trade JP Morgan if the Dow isn't, say, moving higher or lower, as long as there's some kind of direction. The first thing that we want to remember is that we wait. Okay, the bell is rung. Everyone else is flailing and slinging trades and whatever else. We wait. We wait 5 minutes, at least 5 to 10. And the reason we do that is because we know the participation is going to come in the first 5 minutes. Bell is rung. Stock market's open. Futures have been rolling along, but the stock market's open, and that's going to have an impact. We'll get oftentimes a larger candle than on average we've seen the preceding 20 or 25 minutes. And we know that as volume comes in, the spreads, the difference between where people are buying and selling anything, that spread narrows. And that's a big deal because that's an element of risk. Now, as far as pre-market strength and where we might want to put our attention, it's going to be on trends, right? So in the meantime, what has a trend? I don't care if it's up or down. I prefer up. But what has a trend? And right now, you can see gold has a trend. So here at 932, let's get that on the radar. Gold has a trend. What else has a trend? Of crude, bonds, silver, gold. Gold does, and that's it. And that's it. Now, early signs here. That's not what I wanted to do. There we go. Early signs that we have a trend in healthcare, in transports. And those are both uptrends right now. So early signs, obviously. It's 932. So gold is moving higher. So if gold is moving higher, we're going to ask some basic questions. Is it above or below the previous session close? Well, it's right at the previous session close right now, which means if I'm going to end up buying gold, my zone is going to be here, or I can extend out the previous Darvis resistance, what was once resistance becomes support, and that would then be actually right in line with the very bottom of the wave, which is our mean reversion or our average that we would expect price to come down to on a pullback. So that's what we're looking at there. I don't love the fact that I'd have to be below the previous session close to do that, but since we're clearly willing to break above it, it should not be that much a problem. So when I'm looking at gold, let's keep an eye on this area between 3473.3 down all the way to this previous high, 3470.4. So in that range, we might be interested in long gold, GC, MGC, so those are the futures contracts, or GLD. And if GC is moving higher, I know we don't have a trend right now on GDX, but if gold is moving higher, it should take GDX, Newmont Mining, maybe Agnico. Let's see, Barrick. Yeah, it looks like GDX might be the best contender. So it should take it with it. So much like crude oil moving higher tends to move oil stocks, when gold's moving higher, it should tend to move gold miners, right? So we'll definitely keep an eye on that. If we like gold, we might like gold miners. So that's one thing we'll keep an eye on there. And then as far as looking at, let's take a look at silver, because we had a good trade in silver. What was it, this week? All right. So do gold and silver tend to move together? Not always. They're two different markets, right? However, there's sometimes a sympathetic movement from silver and gold. If gold's moving higher, silver sometimes will tag along for the ride. Silver ultimately is going to sometimes move like gold. It's going to sometimes move like copper. So it's going to be a little bit of looking at both of those to get a better read on why and how much silver might move. All right. So if copper is weak and gold is strong, I'll probably avoid silver. So there's better clarity in gold. Yeah. All right. So we got that out of the way, and we're going to wait for a pullback. So as long as I come back to the moving averages of our average, right, our mean reversion, our wave, we know that's going to change a little bit with every 5 minute. I'm going to look for a pullback. And you might say, Rog, why wait for the pullback? Why not buy it now? Well, that always presumes that it's going to go higher. It may or it may not. It's hard to sort out what a target might be. It's definitely difficult to sort out risk. Those are things that are all kind of difficult if you're just going to chase something because it appears to have follow through, right? Those are definitely challenges for traders who, if you trade momentum, that's just a reality. All right, so Pup wants back in the office. All right, come on in, Pup. Pup indicator is on today. Yes. It's a hot South Florida day. She's doing like we all will be doing this weekend, perhaps basking in the sun and having a good relaxing weekend. All right. So remember that brings up another point. This is a 3-day weekend we're embarking on. Yes. So when you've got a 3-day weekend, there's oftentimes a little bit more profit taking into it. We'll see what happens, right? Because there's an extended period of time that traders will be away from the market. All right, so we've got our eye on gold. We've got our eye on GDX. All right, what about the broader averages, Ron? They don't seem to interest you today? No, not so far. A couple things might be interesting, but not great. Let's start off with the Russell. So notice I'm not picking my favorites, right? What do most traders unfortunately do every morning? They go in, they trade their favorite stock. It doesn't matter what it is. They trade their favorite index. Again, doesn't matter what it is. My favorite is the one that has clarity. Now, Russell could be interesting for us. And remember, we still have that hot zone coming up at 10 a.m. So let's get the beginnings of Russell, the Russell in focus. I'm going to look at the Russell here. What I'd like to do is look at the support of this Darvis here, right around 2378, because it is below, right here, this line in the sand, our previous session close right here. Because it is below it, I'll put a tighter stop. So when we set up the trade, you'll notice I'll put a tighter stop on this. But I am interested in the Russell. Here's another thing that I like. All right, so I have a neutral market, bullish momentum, and our oscillator that reads overbought, oversold is kind of cruising down towards that oversold support. Cool. I'd like it to be there. So I would love this to actually read oversold on the indicator while we get down to this support level. All right, that would be fantastic. As good as I can expect without a trend and not being above the previous session close. So the way we'd set this up here is we take a look at the IWM. Now, can you trade futures in the Sector Secrets Mastery? Of course, right? I never recommend anyone start, however, with futures. If you're brand new to trading, there's a lot of ways that futures can be learned. My favorite is to encourage you to trade the IWM ETF alternative, then maybe make a step into micro or mini futures. So as you're learning about how volatile futures can be and the nature of that market, try the IWM if you want to trade RTY, futures, Russell futures. Same thing with the ES, SPY, QQQ, DIA. So if we can get down to about this level here, 2378 and change, I'll be looking very likely at 236 or 235 calls, probably the 235, because you look at the value of the 236, it's already below $1. So I'd be looking at the 235 call. All right, now when am I going to trigger it? Well, I'm going to use an aggro position size. Remember, we have the position sizing guide in the room. I can show you a little bit later how to find it if you don't know. But for those of you that know where the files drive is, it's in the files drive. So I'm going to wait for now notice what I put there. RTY. I'm going to put the Russell there because I'm not looking at IWM. All I need to know is where the IWM option strike would be. That's the only value for that. And then I'm looking at the Russell the rest of the way for the entry and for the exit. And the only time I'm going to look at IWM is 1, to find the strike, and 2, to put in the order. But I'm really looking at RTY to time everything. It's going to be aggressive only because it's a singular level, right? That's going to be right there around 23.78. And if we can get down there, great. If we can't, no problem. This is a setup, right? We just don't trade where it's at. We wait for price to give us an edge from a risk reward perspective. And that's where that would be for me. Now, if something else develops between now and then, great, right? No problem. If there's a new Darvis, if a trend organizes, awesome. But until that point, I'll wait for price to get down to that level. On the way back up, pretty simple. When I'm going to scale out of this trade, what I'll do is look at 23.83. That'll be where I'm looking to scale out of. All right, so you got a pretty good look at the first trade here of the morning. And I'm going to go close up the office here. And, and then we're going to take a look at, close this office door here. I need a big stick to be able to reach it. All right, so we're going to take a look at what's next. But let's keep an eye on that RTY. Let's keep an eye on gold. And let's see what else is on our radar.